I'm John Hanna with CTTV.net, and we have Greg Womack, President of Womack Investment Advisors, joining us from Edmond, Oklahoma. Good afternoon, Greg.
Good afternoon, John.
How are you today, sir?
We're doing well. Happy 4th.
So, oh yeah, 4th of July. That's so
Happy birthday, America.
Happy birthday, America. There you go. You're gonna go to a 4th of July festivities there?
Yeah, we'll do it
in
at
Oklahoma?
evening time. Yeah.
There's no heat wave restriction, like water restrictions and all that stuff, because I heard some of the other states are like canceling their 4th of July festivities.
Most of the city-sponsored stuff will go on, but we're not in drought conditions at this time. But we haven't had rain for a couple of weeks, but we're not in drought conditions at this time. But so the most of the cities are still doing the fireworks show.
There you go. Now, so what do you have for us for this? Well, it's kind of like semi-shortened week because this is the middle of the week, right?
Right. Well, you know, it's kind of the officials in the Eurozone really kind of saved the week last week for the quarter end. I mean, we had a major rally, you know, on the last day of the quarter, the 29th of June. And so the Eurozone officials, you know, agreeing to some measures to help ease the region's debt crisis and promote longer-term stability, really helped power equities higher. And the measure also boosted prices for both oil and gold, while treasuries ended the week relatively unchanged. And so as we speak, you know, the market's up about 5.5% year-to-date through the end of the quarter for the Dow, and the NASDAQ up roughly 12.7%, and the S&P roughly 8.3%. So we had a really nice rally, but you know, for the quarter overall, it was the markets were off some, and a lot of that is due to the Eurozone issues. And like I said, we had a lot of pressure from Italy and Spain. The European leaders decided to get together and come out with, you know, no details, but at least announcements they'll have something in place by year end. And the current bailout fund and its replacement through the European Stability Mechanism will be able to lend directly to struggling banks. And so this has kind of put another Band-Aid temporarily on the problem, and the markets are responding positively to that, as well as commodities. You know, commodities, including gold and oil and metals, have all been just beat up over the last month or so. And we're seeing oil rebound from the lows, and also gold and precious metals as well. But back home, you know, the big news last week was the Patient Protection and Affordability Health Care Act in wake of the Supreme Court's ruling that the health care reform legislation is constitutional. Major announcement and, of course, controversy on both sides of, you know, of the decision. But the 5-4 decision that held the penalty to be paid by those who choose not to buy health insurance as required by the law is constitutional as part of Congress's power to tax and spend. So the issue is not over. Naturally, we have the elections coming up, and as Judge Roberts has said, you know, we can make a decision if we don't like what's going on in Washington. And then we had the final numbers for the first quarter GDP remained at 1.9%. That's substantially lower than the 3% for the fourth quarter of 2011. And then consumers spent less and saved more in May, according to the Commerce Department. Spending was down 0.1%, while savings went from 3.7 to 3.9% annually. And after 2 months of declines, orderables for durable goods popped up 1.1% in May, according to the Commerce Department. And also the Commerce Department said new home sales shot up 7.6% during May. And that put sales at their highest level more than 2 years, almost 20% higher than a year earlier. And there's also a bit of good news on home prices. S&P Case-Shiller Index was up 1.3% in April, and 19 of the 20 cities measured by the index saw gains. However, Detroit had a 3.6% loss. We're still, though, that left prices on homes at 1.9% below last April, though that was better than the 2.6% year-over-year decline. So really, like you said, the shortened week. Actually, today, Tuesday, July 3rd, the markets are going to close, I believe, at 1 p.m. on Eastern Time. So shortened day today, and of course, closed on the 4th, and so we have left this week really unemployment payrolls on the 6th of July. So shortened week, but the markets are at least as of July 3rd today are up across the board, with commodities and leading the route of oil's up again several percent, and gold is up about 1.5%.
There you go. That's Greg Womack, President of Womack Investment Advisors, joining us from Edmond, Oklahoma. And I'm John Hannan for CDTV.net.